Every YouTuber out there is talking about Wyckoff Theory this, Wyckoff Theory that, and you must be confused and might not understand what this Wyckoff Theory is. Don't worry, in this video I'm gonna teach you everything that you need to know about the Wyckoff Theory. So let's get started. Welcome back to another video, guys. It's your boy Hima, and of course thank you so much for tuning in. And if you're new to the channel, I talk about stocks, crypto and money in general, and if you're finding anything that useful from my videos, please hit the subscribe button and the like button and the bell notification. So like I told you, today I'm going to talk about the Wyckoff Theory, right? So I'm going to of course put a link below to an article that I wrote about the Wyckoff Theory in detail, all right? But this video is for anyone and everyone who does not have any kind of background in financials or stock trading or investing, all right? So if you are a newbie, you should watch these videos because I'm gonna break down Wyckoff Theory for all of you guys who are new to the game to understand this theory and grasp its core concepts. And of course, if you want to read more, click that link below. So who's Wyckoff? Richard Wyckoff was an American investor and a trader, and of course he's a pioneer in technical analysis. So if you want to read more information about Richard Wyckoff, of course I'll put a link below and you can have a read. So according to Richard Wyckoff, there's this external force that is manipulating the markets. These are big institutions, big investors, you know, with large sums of money, millionaires and billionaires. According to Wyckoff, these people are manipulating the market. They're taking money from little retail guys like you and me, and they're being wealthy. And this whole situation, this force, Wyckoff called this whole phenomena the Composite Man. So Composite Man is basically big institutional investors. But according to Wyckoff, retail guys like you and me can benefit from the stock markets or crypto or anything by trailing the behaviors of these big institutional investors. Meaning, according to Wyckoff, these big institutional investors, they leave a trail behind. Their methods are simple and easy to grasp, but of course they are overlooked by little guys. But if we are careful, we can actually identify their moves and follow them so that we don't lose money. You might be thinking, is that even possible? Well, according to Richard Wyckoff, it is. So Richard Wyckoff came up with 4 phases in a market, all right? First is the accumulation, and then the uptrend, distribution, and then the downtrend. So accumulation is where these big institutional investors or the Composite Man is putting their money. This is when they are buying the stocks. Accumulation is basically a period where the market goes sideways, and of course usually, according to Richard Wyckoff, in accumulation period, these big investors are piling their cash into crypto or stocks or anything. And after the accumulation comes the uptrend, meaning the market goes up. Of course, when more people are buying more money into it, the volume increases, therefore the demand for the certain asset increases. With it, its price goes up. And then the distribution phase comes in, the third one. In distribution phase, these big institutional investors are taking out their profits, meaning the stocks or the crypto that they bought in the accumulation area, they're selling out in the distribution area. And who's buying these stocks or this crypto? The little guys. Because most of the time, retail investors get into the market really late. And once the distribution is finished, the market of course goes down. And little guys like you and me ended up losing tons of money. So this is how Richard Wyckoff explained what this Composite Man does. All right, this diagram over here explains this better. And you might be asking, how the hell am I gonna identify these phases in an actual market? Well, that's a fair point. Don't worry, I'm here to help. First, we'll start with the accumulation phase. So according to Richard Wyckoff, these big institutional investors, they always usually follow a certain pattern when they're piling money into a stock or anything during the accumulation period. And he drove a schematic that looks like this. As you can see, this schematic has 5 phases. Now I'm not going to go in details about these 5 phases. Alright, all you have to know is whenever there's an accumulation, this pattern over here is clearly visible. So when the Composite Man or these big institutional investors are accumulating into the market, what that does is that pushes the price up, and then we have our uptrend. So when the big institutions, big guys are starting accumulating, of course that pushes the price up. Alright, and of course then the middle guys come in, and that pushes the price even further up, and at the end of the uptrend you have retail investors, little guys, very little guys with small amount of money like 10,000, 20,000, 100,000. So these guys jump in. This is when the public gets into it, because that's when the news breaks out and public, most of the people jump into it. And of course during an uptrend you will have smaller accumulation periods. That's normal because it's not always a straight line. So at the end of the uptrend, demand is excessively high and there's low supply. So the next phase is distribution. This is when the Composite Man is taking out his profit. So obviously if you had gotten in earlier, you made thousands of dollars. No, millions of dollars. No, billions of dollars from a certain asset. Alright, and now he's taking out profits. So usually people take out profits, and that's when the markets come down. So Composite Man is taking out his profits during distribution. So that's why it's called distribution. They're giving out, they're selling out parts or chunks of their portfolio. And who's buying these stuff? Of course the public, people who got into the market later. As soon as the distribution phase finishes, you have your downtrend, meaning now the demand is lower and the supply is higher. Alright, so what this does is this actually the market comes down because of course the bigger guys are selling it. And of course, like I told you, small retail investors get caught in this headwind and they lose money. Of course, just like in an uptrend, you'll have reaccumulation phases in a downtrend as well. And of course, sometimes you'll have a dead cat bounce as well. Alright, dead cat bounce is you'll have a fake bull trap. Alright, that's what a dead cat bounce is. And of course, in a distribution, just like a accumulation, it has 5 phases as well. So distribution, just like accumulation, has 5 phases, and it works and it looks like this. Alright. The bigger question that you might have is, Hima, why is it drawn like this? The question that I had. I'm pretty sure so many of you have as well. So the reason why Wyckoff drew it like this in 5 phases in both accumulation and distribution is because he believed that for big institutional investors, whether they want to buy into a stock or any kind of asset, or whether they want to sell it, they can't just take billions of dollars in and out like that. So we have the capacity to do that. If you want to buy shares, you can buy a $20,000 worth of shares. That won't affect the price that much. But imagine putting out $1 billion. It will affect the market drastically. So this will have repercussions, and of course these people operate on rules and regulations set by certain countries. Of course in US you have the SEC. So when they accumulate in a certain way that does not affect the market. That's why the market goes sideways. Alright, so that's why Wyckoff drew this schematic with these 5 phases, so you understand how these institutional people are buying into a stock. They buy it gradually. They don't just put $1 billion like that. Same goes in a distribution phase, which is the selling off. They don't sell off $1 billion. Alright, they don't take profits like that. It happens gradually in a given period of time. Alright, and of course the Wyckoff didn't tell us in his theory about how long these periods are gonna take, but he gives us 5 phases to identify a certain buying or a selling behavior that this composite man exhibits. So when there's a distribution, these big guys, they sell a little bit, and of course more retail investors jump in, the price goes up, and then they sell a little bit again, the price comes down, and then more people jump in. Of course the people who jump in at the last are the public, and of course that pushes the price up, and then they sell again a large amount of money, and then the market comes down. So that's why you have this in the schematic. Now of course if you want to read about these phases in detail, click that link below. You can do it. I'm not gonna do it because I want to keep this video as simple as possible. Alright, so I talk about the fundamental concept of the Wyckoff theory. You have an accumulation, an uptrend, a distribution, and a downtrend. Now let's look at why people are saying that Bitcoin is being manipulated by these big institutions. We don't know who has majority of the Bitcoin supply. Of course the miners gotta be key players in this. I don't know, like people like Elon Musk, I'm pretty sure he got into Bitcoin way earlier. Alright, this could all be a game, and Wyckoff would tell you that these people are manipulating the market. Alright, so let's look at the Bitcoin charts and try to find out these key concepts, these key Wyckoff concepts in Bitcoin, and get an idea as to how we can navigate this entire crypto game by following the Wyckoff theory. So let's jump into the charts. Alright guys, so we are looking at the Bitcoin chart. Alright, first I'm going to show you the distribution phase. Alright, and then I'm going to show you the accumulation phase. Okay, so I've drawn a couple of things, ignore it for a while. So let me get this image first. Okay, so this is the Wyckoff schematic in the distribution phase. I hope you guys can see this. So as you can see, all right, so we have 5 phases over here. Like I told you, in distribution and accumulation you have 5 phases. All right, you don't have to remember the phases, all right, but make sure you have this picture somewhere stored in your computer. So, and the other thing I want to show you guys is this post from April 2019, April 19, 2021. The other thing is, I'm in tradingview.com. They have an amazing community. Alright, it's really great way for you to go and learn many things. Alright, so this guy, when he made this post, we were over here in April 19. Bitcoin was already in trading around $58,000, right? So this is, look into this right now and tell me whether you see this or not. All right, so you have the chart over here, and as we can see, the BC is buying climax. All right, and we're seeing this pattern over here. So this is like a head and shoulders thing. So you have, this is our BC over here. All right, and it comes down. All right, and then goes back up again. This is our ST, comes back, spirals and goes up. This is our UTAD, and comes back up again. I think this area over here is our LPSY, right? When this guy made this chart, let me reload it, we were at UTAD. So UTAD is upthirst after distribution. All right, so after distribution, of course, like I told you, little guys jump in and that pushes the price up again for one last time. All right, and if I hit play, look at that, look at how it panned out beautifully. All right, so this was LPSY and we came down and now we are over here. All right, so that was the distribution, Wyckoff distribution. You can see it in Bitcoin chart. So this is why so many people are saying Bitcoin is being manipulated, and of course we know when Bitcoin is manipulated, because it's the main denominator in the crypto market, it affects all the other cryptos. All right, so now let's look at the accumulation period that's going on right now in Bitcoin. So this picture is in the article that I told you about, that I wrote. Make sure to go and read up all of these AR, ST, Spring. All of these definitions are in the article. I'm not gonna go into it because, like I told you, I'm trying to keep this video as breezy as possible. So all you have to do is look for something like this. All right. So look at over here. Look at over here. All right. We are right now seeing a classic accumulation. All right. So we had our selling climax over here. Went back up again at AR, came back up. So we have our selling climax over here. All right, went back up. All right, we have our AR. AR is automatic reaction. Of course, when something goes down, people have their buy orders set in. So buy orders kick in, and then of course the price goes back up again. And we came over here, went back down again. All right, and look at this. Look at this and look at this compare this with this picture, right? Look at that, beautiful. Classic Wyckoff schematics can be seen over here, all right? And remember, this theory came out in early 1900s, all right? More than 100 years old, and it still looks the same. It still applies to everything because this is market psychology. Yeah, Bitcoin is a new asset, but that does not mean different people are trading it. The same people who traded stocks are trading Bitcoin. The same people who are trading commodities are trading Bitcoin. All right, it's not aliens, it's people. Look at that. Now we still have a few more stages to go in this period. All right, and I don't know whether you guys remember or not. In my previous videos, I've talked about that Bitcoin will come to this neckline, which is of course the $52,000 mark, and then head down back to the most possible level would be $20,000. All right, of course, once the schematic is complete, we are still at this spring level, right? See this spring. All right, so it has to come up a bit and down and then go up. So something like this, I've drawn this like a sketch. So we'll hit that $52,000 mark and then we'll come down. And of course the volume is surprisingly flat, not high, not low, surprisingly flat. Of course, usually that's a good sign that the accumulation is buying. Like I told you, this is not long-term investors. This is a work of short-term institutional traders. All right, to me this looks like a swing trade. All right, what will happen is they're pouring billions of dollars in. All right, like I told you, the reason why it goes up like that, down like that, is because you can't just put $1 billion into the market without affecting the market in a drastic way. So you have to do it gradually, little bit. All right, but there will be a point when this will go up. But I don't think it'll go up about the $52,000 mark. I think once it reaches this level, alright, this area over here, then these guys will sell all, and then we'll have our proper correction. This is what happened in 2017, guys. You don't trust me? Look at that. This bump over here, this one over here, and came down. And of course the public will again have that optimism, that over optimism over here, and they'll start buying in again, just like they did over here. And what will happen is they'll suffer more, because these big guys who are getting in right now will sell, and then most of the retail traders will lose money. Alright, so that's what's gonna happen. This is why people are saying that Bitcoin is being manipulated, and this is the classic Wyckoff accumulation and distribution. I hope I made this entirely clear for all of you who are watching this. If you don't understand, please put a comment. Alright, try contacting me in my social media accounts. I'll teach you. Alright, I'll teach you. But this is how it looks like. So what can you do right now? You got two options. Option number one, the option that I'm taking right now, I'm patiently sitting on the sideways and looking as this pans out. I'm looking, I'm observing, I'm saving money, I'm getting rid of my debt because I want to buy into Bitcoin. But of course, not at these levels. My ideal buying point would be $20,000 or somewhere lower. Option number two, just like the institutional guys, like I told you, Wyckoff said that if you follow the institutions, you'll be able to do something. You'll be able to make some money. You can jump in right now with a considerable amount of money. But before you do, have a stop loss. All right, please have a stop loss. Your stop loss should be $28,000. Have a stop loss, wait and see, and exit at $50,000. Don't even wait till it goes to 50. Exit at $48,000. If you buy in right now, 48,000, that's like a roughly about 50% gain. Not a bad amount. Exit over there. That's option number two. Alright, but never buy in at the top. Alright, I want to show you guys one last thing before I finish the video. Total, yeah, I have the total too. Look at this. This is the entire crypto altcoin market without Bitcoin. Similarly, it's showing the same thing. Like I told you, there's a higher chance that this might go up over here and then come down. Let's go back into Bitcoin. So this is the situation that's happening right now. All right, and I hope you understood what Wyckoff Theory means at this point. All right, I hope I was clear. Oh, you don't have to remember all of this. All right, all you have to do is keep those two pictures nearby. All right, and whenever you see a chart like this, analyze it, compare it. All right, and of course there's accumulation, distribution. That's all you have to remember. And the other thing is you have to follow the Composite Man. If you do exactly the opposite what he's doing, you're gonna lose money. Alright guys, that's it for today's video. Thank you so much for tuning in. I hope I made everything clear for each and every one of you. Like I told you, if you have a problem, put a comment below, and of course you can reach me out in the social media as well. So until I'll see you guys in the next video, happy trading, and of course make money, do not lose it. Peace.